Hello, everyone. Welcome to this quick guide on living benefits in life insurance. If you've ever thought life insurance is only useful after you're gone, think again. Today, we're diving into what living benefits are, how they work, and why they might be a game changer for your financial planning. By the end of this video, you'll understand how these features can provide real support during tough times while you're still alive. We'll break it down step by step and share some practical examples. Let's get started. At its core, life insurance is designed to protect your loved ones financially if you pass away, paying out a death benefit to cover things like debts, living expenses, or education costs. But many policies, especially permanent ones like whole life or universal life, include something called living benefits. These are features that let you access part of that death benefit or other policy perks while you're still living, under specific qualifying conditions. Think of it as an advance on your policy's value when life throws a curveball, like a serious health issue. Living benefits aren't standard in every policy. They're often added as riders, optional add-ons that might cost a bit extra, but can be invaluable. Here are the most common types. Accelerated death benefit. ADB rider. This is the big one. If you're diagnosed with a terminal illness and have a life expectancy of 12 to 24 months, you can request a lump sum payout from your death benefit. It's like getting an early portion of the money to use now. The amount you get is typically reduced by fees or interest, and it lowers the eventual payout to your beneficiaries. Chronic illness rider. If you develop a long-term condition that prevents you from performing basic daily activities without help, this rider lets you tap into the death benefit. It's great for covering ongoing care costs. Critical illness rider. This kicks in for specific events like a heart attack, stroke, cancer, or organ failure. You get a payout to help with medical bills or lost income during recovery. Long-term care, LTC rider. Similar to chronic illness, but focused on extended care needs like nursing home stays. It can provide monthly payments or a lump sum. Cash value accumulation. For permanent policies. Not exactly a rider, but a built-in living benefit. Your policy builds cash value over time, which you can borrow against or withdraw tax-free for things like emergencies, education, or even retirement. And don't forget riders like the disability waiver of premium, which pauses your premium payments if you're disabled and can't work for 6 months or more. No cash payout, but it keeps your policy active without draining your wallet. These benefits vary by insurer and policy, so always check the details. They're more common in permanent life insurance, but some term policies offer them as add-ons. It's straightforward. You buy a policy with these riders included. If a qualifying event happens, like a doctor's diagnosis, you file a claim with your insurer. They'll review medical records and approve the benefit if you meet the criteria. For example, with an ADB rider, you might get 50 to 75% of your death benefit upfront. The money is usually tax-free and can be used however you want. No restrictions on medical bills only. But remember, accessing these reduces the death benefit for your heirs, and there might be small fees to cover the insurer's lost interest. Permanent policies add another layer with cash value. As you pay premiums, part goes into a savings-like component that grows over time, often with guaranteed interest. You can take loans against it or withdraw funds, but loans must be repaid to avoid reducing the death benefit. Pro tip: not all policies qualify everyone. Pre-existing conditions might affect eligibility, and benefits could impact Medicaid or other government aid. Let's make this concrete with some examples. These are based on common scenarios. Names and details are fictional, but the situations are real. Example 1. Terminal illness with ADB rider. Meet Sarah, a 55-year-old teacher with a $500,000 whole life policy, including an ADB rider. She's diagnosed with stage 4 cancer and given 12 months to live. She claims her living benefit and receives $300,000 upfront. Sarah uses it to pay off her mortgage, cover experimental treatments not insured, and take a family cruise to create lasting memories. Without this, her family might have faced financial stress during her final months. The remaining $200,000 goes to her beneficiaries when she passes. Example 2. Chronic illness rider in action. John, 62, has a universal life policy with a chronic illness rider. After a severe stroke, he can't perform 2 daily activities without assistance. He accesses 2% of his $400,000 death benefit monthly, about $8,000, to hire in-home care. This covers nursing help, allowing him to stay home instead of a facility. Over time, it eases the burden on his wife and preserves their savings. Example 3. Critical illness and cash value. Lisa, 45, suffers a heart attack. Her term policy has a critical illness rider, paying her $50,000 from the death benefit. She uses it for rehab and to cover 3 months of lost wages. Later, switching to permanent coverage, she builds $20,000 in cash value over years and borrows $10,000 interest-free for her kids' college tuition. No impact on her credit. Example 4. Disability waiver. Mike, a construction worker, injures his back and is out for a year. His policy's waiver rider pauses premiums, keeping his coverage intact without payments. This saves him $200 monthly, helping him focus on recovery. These examples show how living benefits turn a just-in-case policy into a right-now resource. The upsides? Peace of mind, financial flexibility during crises, and potential tax advantages. They can bridge gaps in health insurance and protect your savings. But consider, riders add cost, payouts reduce death benefits, and not everyone qualifies. Shop around. Compare policies from insurers. Always read the fine print or talk to an agent. Living benefits transform life insurance from a posthumous payout to a living lifeline. Whether facing illness or planning ahead, they offer real value. If this resonates, review your policy or explore options today. Thanks for watching. Subscribe for more financial tips and share your thoughts in the comments. Stay protected.